third week of 2023. Compared to last week, I think sentiment probably changed dramatically. Last week, it wasn't as clear on what the market is doing. And right now, Bitcoin is 21,000, up 20%, DeFi chain up 20%, Ethereum up strongly. For those of you betting on DUSD, that coin is getting closer and closer to $1. So yeah, I think everyone very, very hopeful. And that's going to be the discussion for today. It's going to be a very honest discussion. So really nothing about that is, I don't know, played or fake. It's actually Fabio, and I'm going to set the stage on that as well. Fabio normally always during town hall on Friday comes in and shares this hopium crypto presentation. It became so much hopium that the lawyers actually forced him and required him to do a disclaimer up front, which is always quite funny. So we're going to do that same disclaimer today. I'm going to take that side that I normally take, which is a bit more the cautious side, a bit more, let's say, the skeptical side that bull run is sustainable. I am more of the skeptical side there. I do want to highlight one thing, though. Just because I'm skeptical of that doesn't mean that I'm skeptical of crypto or something. It's just that, I don't know, something doesn't feel right. I would love for Bitcoin to hit 100,000 next week. That would be nothing would make my life easier. But yeah, I think
No, you're not completely out, but a little bit delayed, I think. And okay.
Connection, it says. Am I back? Test. Okay. Some people can see me. Maybe Fabio is gone. That could also be.
I can definitely hear you, but
Can you show me
I
on the
think
Twitter space that with a thumb up that you can see me? Okay. Okay. No, so that was Fabio's issues. Okay. So it was Fabio. I thought it was me, but it was actually Fabio. Okay. Understand. Okay. I just thought that this was me, but actually it was Fabio. All good then. So Fabio's going to take the bullish side. I'm going to take the skeptical side. I think I just want to highlight that I'm actually also very optimistic. I just have this, I think, and most people do understand that I have some skepticism there. And yeah, and we're going to have a bit of a debate. We're going to have a bit of a discussion. Fabio is going to start and he's going to do his disclaimer. So he's going to pull up his screen share on YouTube. He's going to read it out for you on Twitter. So there is a healthy disclaimer on that. Fabio, I don't know if you also want to share a week ago when we met each other in Europe in person. I don't know if you want to share that story as well, how we saw each other at the very beginning and then how that kind of progressed during the entire week. I don't know how much of that you want to share, but I think this may be a nice story to come in. And then we go into your hopium presentation.
Yes. Hey, everybody. I think sorry for the initial issues with my sound. I think everything should be working now. Before I go into the disclaimer that Julian just mentioned, maybe a little bit of the backstory. So we met each other in Europe last week. We spent the whole week together. And as you might recall, the beginning part of the week wasn't that bullish, actually. And I think on Tuesday or on Wednesday, actually, we had a bit of a sit together, and I shared something personal regarding my state of being with Julian, where I said that market conditions affect me a lot more than I like to admit. Whereas 15 months ago in October, November 2021, where we were at all-time highs and all of these ETFs were launched, I was a bit manic. Like I was working like crazy, following the news, leverage trading, and I was, the 100K seemed like a certainty. And while like 2 or 3 weeks ago, I really found that kind of the opposite, that I felt a little bit frustrated and depressed. I couldn't really see the light at the end of the tunnel, of course, because I also have a lot of exposure to the negativity on socials. So I shared that with Julian, and this also affected not really my performance, but like when I'm happy, of course, I illuminate other people with my happiness and with my motivation. And sometimes the last few weeks, especially, it was a little bit of the other way around. So market conditions definitely affect me. Yeah, I would be lying if I said anything else. Maybe I go into the topic of the disclaimer now
Yes, please.
before we start. So as Julian mentioned, I do these weekly presentations internally where I talk a little bit about the market. You need to see we scaled up as a company very, very fast, and we have 65 people right now. And not all of them are as deep into crypto as Julian or me, because of some people, they have only very small overlap with the degen technical analysis, Twitter part of crypto. They are focused on a lot of other things, and they were hired for their expertise in a certain area. So I try to, I don't know, get them pumped sometimes. And my presentations, they usually include a lot of class note slides or some work that influencers did. So for the disclaimer and for everything that I'm going to say in this Twitter space, please, the information provided are for information and entertainment purposes only and should not be relied on as financial advice. Cake DeFi is not a licensed financial advisor. You may wish to approach your own independent financial advisor and make your own decisions and do your own research. Any views, opinions, references, or whatever statements are not necessarily the groups that Cake DeFi helps. They're just random things that I, as an employee, say or is going to say. Past performance is not an indication for future results. That's the gist of it. There's a lot more legal words in there. I just paraphrased. But
Fabio has to share this every town hall before he goes into his Hopium presentation. Guess how he feels after that? After that, he feels like so much like energy build up, and he goes even harder. So
this practically gives me a free pass to say everything that I want to. I confirmed this with our lawyer.
Okay, let's go. Go.
So I guess I'm going to make the beginning, and
you go at the beginning. You do the beginning, and then I don't know. You want to pull up your slides, or you're going to do it all freestyle, or what are you going to do?
I can share some. Let me just briefly make an intro, and after that we could look at some data as well. So Julian is going to be a little bit of the realist here, and of course I'm going to share the whole team. So I think the bottom is in. Period. As when we go 15 months back, everybody was crying for 100K, and everybody was certain of it. And bottom calls are a bottomless pit. If I would have asked you,
I'm gonna take this as a really good debate, and I'm gonna take notes, so that afterwards, when you have a statement, I can say, so when you said this, how are we gonna, so I take this professional here.
Okay, sure. Right now, when you go back a year or 2 years, not 2 years, like 50 months ago at the top, if anybody would have asked you, where do you see the bottom in this bear market? Nobody would have said under 20K. Everybody was certain we would never break all-time highs again. So we are much lower and a lot more oversold than initially expected. And still, people are still calling for lower lows. And just as an anecdotal evidence, I've been back to Switzerland visiting my family with Christmas time. And so many of my friends, they're like not no coiners, but they have a little bit of Bitcoin and they don't follow the market in any way. No podcasts, no Twitter, no nothing. They just sometimes they read traditional news. And all of them are waiting for 5-digit Bitcoin. All of them think we're going under 10K and this will be a great buying opportunity. And you see the same thing happening on the socials. Like one of the accounts that gets the most attention right now is Capo Crypto. He's calling for 12K since a year or so. He's completely outside of the market. And this is exactly what this plays into, because there's so much capital on the sidelines. Everybody's waiting for lower prices, and at one point, like right now, if you see these small pumps, um, go back to 2019. We went sideways for a bit, and then we practically had a pump from 3,000 to 14,000 with no bigger dips in between. And these are the moments where the whole market is really suffering, because everybody's waiting for lower prices. No, and so at one point, the hope, the FOMO, and the market is really just sucking you in, because you feel like, oh my God, I didn't time the bottom perfectly. I'm going to miss my entry, and the price is just running away from you like a train. Um, and you really, there's so many indicators. Now we can go into a little bit of the data. Let me just pull up a tweet from this morning. For everybody that is listening in on Twitter, I'm going to walk you through this. You can actually follow along on Willy Woo's Twitter. This is Woonomic with two O's. So he has this CVDD floor chart where I don't know how exactly the model works, but you can see this purple line with a few perfect touch points, one in 2015, one in 2018 at the end in December and the beginning of 2019, almost a touch with the COVID dip in March 2020. And now we are perfectly aligned on that line. Again, we bounced off, and we're moving higher. He shared a few other charts, like the cost basis of short and long-term hodlers, and this on the chart you can see these pools being built and a filled area right there. And the same thing right there, we had it in 2015, we had it in 2018-19, and right now the pool is starting to fill again. Usually Plan B shares these kind of charts as well, where he practically says, okay, 50% or 60% of the market is currently underwater in their positions. And this is also a good indicator, because usually we go around to a 50% level, that half of the market is underwater, and these are usually the times where bottoms are built. He has a few other indicators, like the Bitcoin macro index, and also he shared the Wall Street cheat sheet, where he says we are in disbelief. This is just a part of the data. If you can look at so many other indicators. Maybe I'm going to close this screen share and open up another window as my last data point before I pass it on to Julian. Give me just 1 minute to pull this up. I have it right here, I think. Or maybe I give it over to you, Julian, and I share the data in our next back and forth.
Sure. I mean, so obviously I posted this on Twitter as well. If that pump keeps going, nothing would make the crypto industry and myself actually happier. I would have been completely wrong in that assessment. I still don't think the bottom is in. And I don't know, also referencing to me, these models like Willy Woo and so on, it's just a 2.0 of what we have seen with stock to flow. To me, this is what I always call astrology. None of that has any substance. None of that has been shown to actually like make any credible predictions. It always only works backward looking, when you kind of adjust stuff, leave stuff out, add stuff in, give a asterisk to something. And so to me, it's just really, really difficult to make predictions based on that. And so the absolute only thing I would give you where I would agree that you may be right on this, Fabio, is that the majority of people believe the bottom is not in. And in general, the majority of people are not right. And I think that is actually by far your strongest argument. And I think it's by far the strongest market's argument. But everything else, where is this pump coming from? Like, this graph, when it goes down, the market is manipulated. But when there's the pump up, this is completely organic, makes so much sense. On the way down, suddenly the models all have a reason on why the model didn't work. Like there's like 60 reasons on why the model didn't work on the way down, but on the way up, suddenly they work. And so it's always like you kind of twist and turn it the way you want it. And I just don't understand where the pump is coming from. Where's this capital coming from? Who is buying? Why are they buying now? macro hasn't changed. I think we're going to see so much pain ahead. I think we're still going to see a lot of people being let go. I still think we're going to see recession. I think the Fed's becoming irrelevant. I do agree there, and maybe that is a bit of the hopium. To me, if this is anything of a sustainable pump, it's a manipulation pump. Hopefully, it's not a manipulation pump from Grayscale, but this could be. And that's just what I think. I do not like. Let me ask you. Let me throw that question back to you. Who bought?
Yeah, okay. I love that question, and I knew that you would ask it. And I have, of course, I have a theory, a very good one. So a lot of people, especially within the last year, they said, okay, Bitcoin has failed as an inflation hedge. And here I want to point out one thing, and this goes into the argument I want to make: who is buying and why are we pumping? So on 2nd of April, 2020 was like it was 24 hours after the Fed meeting. The Fed practically said we're going to print a lot of money, and Bitcoin started pumping. You know what day marked the top? On the day where Jerome Powell said inflation is no longer transitory. And now let me ask you one thing: if you're denying that Bitcoin, it's not an inflation hedge, it's a monetary debasement hedge and a
That I
check
agree.
on central bank
That
on
I
central
agree.
bankers. Because on the day that Jerome Powell said inflation is no longer transitory and they're going to do something about it, Bitcoin started dumping. So right now, in my opinion, the reason why we are pumping and why I think the bottom is in is the market has this ability to sniff out everything. So, and here I'm going to go on a limb. And I'm going to say all the bad news is priced in. You know, like every bad news that we got affected the market a little bit less than the news before that. So Free Aero Capitals and Luna was a big dump. FTX wasn't actually that big of a dump, and we already recovered 100% of it. So what I think is happening is the market is sniffing out that the Fed is going to pivot, that they are out of ammunition, that it's not going to take long, and as soon as they will just hint at a pivot or at a slowdown, Bitcoin is going to rip and leaving everybody behind that thinks he's smart enough to trade these cycles. I'm always on the I always think that the markets are very, very efficient in leaving people behind that think
That's true.
they are super smart. And right
Okay.
now, people. Okay,
Can I throw something back at you? What about Max Payne theory? Because again, so what I also would kind of add to that is this concept of a Max Payne theory, that if I would kind of draw the scenario of Max Payne, then I would go up from here a bit, maybe get close even to 30,000, but then pull the rug, and then I don't know, then we go back to 10,000. And that would be Max Payne, because there will be a lot of people who will sit here right now, just like me, who's like, I'm in general super bullish, like for crypto, but is super skeptical that right now that pump is organic and is actually going to stay. But maybe at 25,000, a lot of people get convinced to also buy in. Then they're going to buy, they're going to pump it a bit more, and then it's going to get rugged and it's going to go down to 10,000. I mean, it's a theory that you mentioned a couple of times in the past kind of spaces as well. I don't know. I still think the market's probably going to undergo maximum pain, and we're not there yet.
So I 100% agree. I would probably say that a max pay pump to 40K and then a dump again is probably more pain than 30K, because a pump to 40K will probably lure in almost everybody. And as soon as all the money's on the table again, we're probably going to dump again. But the question there is, so many people will say, yeah, of course, but we are going to enter a recession. And Bitcoin is correlated to the general market. So this means if we are entering a recession and the risk assets as S&P and NASDAQ is going to sell off, of course, Bitcoin will as well. But let me just add one point of information here. Bitcoin is sort of a leading indicator. It front runs on the upside and it front runs on the downside. Bitcoin pumped a lot faster and a lot harder than all other risk assets. And the same thing is true on the downside. So I would say Bitcoin already priced in the recession and the dumps that we are going to see in the general markets. Maybe it's going to follow along slightly on the downside. But I think the larger downside is already in. And on
So,
the
what are the price? Like, let's get concrete. What kind of price do you think will not go below anymore? Do you think we'll ever see prices again under 20,000?
possible, Possible. So if we would have a
Possible we
clean
see, or possible that we not see it?
possible that we go under 20K again.
What about possible under 18?
Possible.
Yeah, but then how can you say that this pump is organic? I mean, then okay, what's the price level that you think we're not going to go lower? Because I think we're going to see new
54, like the bottom that we initially had.
yeah, okay, I think that's a cheap shot. Because I
Maybe.
actually, I mean, that's something where I can envision as well. I mean, I can envision that we're going to go to 16, 17, but don't you think that a lot of people who are like FOMOing into the price right now are really going to get burned? And now they're losing 10, 20%. And I mean, maybe it's not max pain, but they're going to really get burned. So maybe we're not seeing a new all-time low. I mean, not all-time low, but a new low in this cycle. But we are going to go down significantly from here, saying 20, 25%, which is we're going to end up at 16, 17,000.
So what I think would be realistic and what I personally would wish for, so like a healthy run up, in my opinion, would be, so if you can see on the video, I have a chart behind me. And this is Bitcoin on the daily, and I have this long trend line touching December 2018, touching March, and touching right now. And a healthy run up, in my opinion, would be, I don't know, a few more thousand, or we can hold here and we go back to retest that level, which is also the same level as 20K, so the old all-time high. And in my opinion, if we retest these levels, so retest the trend line, retest the 20K, and then front run the halvening, that would be, in my opinion, a very healthy run up and a healthy correction, and also a legit bottom.
Do you think that rally at the moment is coming more like the crypto rally? I mean, yeah, I mean, a couple of other things, right? I mean, so a couple of things that are probably weakening my argument and strengthening yours is that we also saw that pump on in the general markets where a lot of the tech stocks and the kind of hopium stocks also rallied. It's a bit more difficult to kind of gauge that because yesterday US markets were closed, so we didn't have that day yesterday. But I mean, so do you think that that pump is coming in crypto markets more coming from the from Bitcoin, or do you think it's coming more from speculational coins?
So I asked myself the same question, and I really try to understand one thing. So it all of these assets. So you have like the S&P 500, you have the Nasdaq, you have the stocks, whatever stock you prefer, you have Bitcoin, and in every we measure these things, we make a price chart with an asset and the denominator. So you practically, and this is usually the US dollar. And many people, they say, okay, why is Bitcoin so strongly correlated with risk on assets? And I would actually say it's not that is perfectly correlated. It's just because when the denominator moves, so the assets that you divide the asset with, of course, these moves are correlated with each other because it's practically it's all tied to liquidity. So it's practically the US dollar that is having strength or it's having weakness. And right now, the US dollar is having weakness. You can also see this, for example, the stocks and the euro as a currency, they're pumping as well. So the euro is recovering, and not because the euro is strong, because they have big issues. They were way too late with their rates. And also, like euro companies are, some of them, UK stocks, they're making all-time highs. And you see a strong recovery rally in euro stocks. As you see in Bitcoin and other stocks you just mentioned. And this is just US dollar weakness, in my opinion, not really due to fundamentals. So the important thing to watch is on the S&P 500, we have a downtrend line, which we are at the upper part of the trend line right now. If we are breaking below that, so if we see more downside in risk on assets like S&P 500 or the Nasdaq, probably this rally will be over. Not that we are going, in my opinion, not that we are going to make lower lows, but that we might have a retest and retrace, I don't know, 10% from here.
I mean, to me, that entire rally up right now in the general markets and also in crypto just reminds me of July. And it reminds me of exactly that same time. People suddenly said, "Oh, everything's over. We're gonna go up from here. Everything is done. Everything is clean." there was no substance to that. There was no basis to that. I mean, you even said yourself, I don't know how that model works. And I don't think most people actually understand how these models work, right? So to me, it's like, I don't know, it's just people run with stuff because they like it and it kind of strengthens their narrative, right? Instead of admitting that actually it's very difficult to kind of like go with that narrative right now, right? And so to me, it reminds me a lot of July. It's just 6 months later. Um, I would love to be wrong on this. I trust me, I would love. I just think people forgot how bad, in what a bad shape the patient is. To use like a hospital metaphor, they forgot, and everything kind of looked too rosy for a little moment, and they're like, "Oh, maybe it's not so bad." And the reminder is gonna come in my opinion. Earnings on stocks are gonna be abysmal. We're gonna go into a recession probably in Q1, so that's gonna be announced in Q2. Um, Real estate is not doing well. I don't know. I just don't understand where this is coming from, and understand that people are hoping for a bullish year of 2023, and I said that I just don't expect that. I think 2024 is the first year we can hope to have some bullish momentum, and so I don't know. I just really struggle with that. Again, the only thing I really give you, because I mean we can try this in the chat. I don't know. Let me know on Twitter. Let us know in the chat. Do you think like bear market is over, or do you think we're gonna see more lows? Like, would be interesting to kind of see, because I do think the biggest weakness in the entire argument about that the bear market, that we're gonna see lower lows, is that just, I mean, we had this event with 300 people on Saturday. I asked that in the room, and I think, I don't know, 90% of the people in the room expected lower lows. And so to me, that's actually the biggest weakness in my entire argument, because everyone expects it. So who is left to sell? And it's easier to actually buy. And so I don't know. I feel it's the only kind of argument that really goes against that. All this chart astrology and like, I don't know, like leaving out certain data points so that something else works better. And I don't know, to me, that's just kind of the bear is gonna find the data stuff that's gonna really helpful for them, and the bulls are gonna find out what's helpful to them. I don't know.
So let me ask you, or maybe the audience, one question. If you go back to 2018, we had this. We were at 6,000 for like months, and we had no price movement. Everybody was posting that meme, please Bitcoin do something. And then we basically we dropped from 6 to 4,000, and at 4,000 people were calling for 1K. Now, if you go back, and I would have said, hey, wouldn't you be happy to have bought Bitcoin at 4,000? Not right now, everybody would say, oh my God, yeah, this was an exceptional price level to buy. But please keep one thing in mind: 4,000 was still more than 30% away from the bottom. And if you're like copy pasting this situation to where we are right now, let's say the 4,000 is now the 15,000, or somewhere around that. If you subtract 30,000 from that, you're going to end up at, I don't know, 10, 12K. So and if we go 5 years into the future, 10 years into the future, 15,000 will seem like an exceptional level to have bought and to enter the market. Even 20,000.
Okay, that is a different argument. I mean, that argument, I completely am aligned with you. 1,000,000% aligned with you, right? I mean, that's also why I said dollar cost averaging is the exact thing to do. And we always teach, don't try to fish the bottom, don't try to fish the top, because it's impossible. I agree with you there. I think it's more of an intellectual exercise, more than are you going to try to time the bottom or not, because I think that's very dangerous actually to do.
I fully agree. And the question that I ask myself: so if you were a trader or an investor, swing trader, whatever, and at the current market conditions, you are on the sideline. So the large part of your capital is in fiat money, and you want to find a good entry into crypto. I'm not sure if this is the good way to handle that. Of course, if you have some dry powder on the sidelines, just in case we go lower and you're going to use that opportunity, probably a good strategy. But just the question that I always ask myself, and that probably investors should ask themselves as well, is what if this was the bottom? What if we have a similar situation than in 2019 and it's just 25K, 30K, 35K in a few weeks or a few months, and you're basically at a train station and you're waving the train goodbye? That's a devastating situation. So I guess it's you said that as well. It's a quantity that makes the poison. So if you're just
the dose makes the
allocated,
poison. Yes, is the statement. Yeah,
the dose.
Celsius. Yeah, the dose.
Yeah.
I mean, this, I think, and I think that's also a nice way to get to at the end here. I think where we are really 100% aligned is that no matter whether this was the low or not, whether we're going to keep going up from here, whether, I don't know, we're going to go lower or we go in circles or whatever, I think both of us agrees, and maybe correct me if I'm wrong, it's a fantastic time right now to start buying, to start building up a position. I would say it's never ever the time to go all in and be like, this is it. Like, we are 100% sure this is the rally. If you don't go all in now, you miss the train. At least that is something I would never feel like right now. I went super crazy, not all in, but 80% in with my entire capital in March 2020. This is not what I would be doing right now. I would be building up my crypto position. I would start buying and dollar cost averaging in. And if the train leaves very early, sure, I have maybe a little bit less on the train, but I will have good stuff on the train. And if the train leaves a bit later in the station, then I have enough time to get really good prices and build that position. That's at least how I approach this. I don't know if we disagree on that, but that's where the two of us stand here.
100%. And I guess for me, what's the most important learning lesson that I personally had over the last 12 years is, and still, I'm still learning, because the main reason why market conditions affect me emotionally is because I'm overexposed. And here we just need to be honest, because especially if we are young, I'm young, I'm 33, I'm willing to take risks, and I have more than 50% of my total net worth allocated into crypto. This is a massively overexposed. If you would talk to a traditional investor, they would call you crazy for that. And of course, this affects me because there is a high level of volatility. But there is like this, the most important thing for me is personal finance. So we touched on that a few times, that you have enough money on the side. If your car breaks, your washing machine breaks, or you need to buy a new phone, there is money on the side, and you don't need to touch your investments for doing so. Also, when we are entering a recession and we are talking about max pain, what is max pain in a recession? You lose your job and you don't find another job for like 6 months. And the market conditions out there are pretty bad. Nobody's looking for employees. Companies are laying off employees, and you need to touch your investments to finance your monthly costs. That is max pain. And for a few of us, historically, this is just true, because when we enter a recession or a bad economic downturn, unemployment rates can go up to 5, 8, 10%. So 1 out of 10 people could be affected by that. And if you prepared for these situations, if you live at a country or if you have a contract that takes care of you in these cases, well played, good for you. Or if you just manage your personal finance accordingly, so if you have a rainy day fund of 108 days, 180 days, or a week or a year, very good, because you can stomach the volatility. You don't need to touch your investments. But this is very crucial. Yeah.
What would have to happen for you to change your mind? I'll make my statement. I think for you it's a bit easier because you can say, well, as soon as a new bottom is in, I was wrong. But for me, obviously, it's harder because and it tends to be harder, right? I think that's why it's really really hard for people who are like who. There's this very famous statement from all the famous investors from The Big Short, who constantly kept losing money afterwards because they tend to be these bears, and it's very difficult if you are like a bear to ever switch to become a bull, because you can always again start believing that you're right. Whereas if you are a bull, at some point you will just have to admit, yeah, we hit a new low. Oh, we hit a new low. We hit a new low, right? So obviously you were wrong. And so like as a bear, you could just always hope that that the price keeps going down again. So I'll start. I think I have an easier, harder time here. For me to change my mind, what I would love to see is probably three things. I would love to see that the earnings that companies report in Q1 are not as terrible as I'm expecting them to be. So that the earning is priced in a sense, it's all about expectation versus outcome. And if the outcome is actually not worse than the expectations, I would see this as a positive. The other thing is, I would love to see Q1 not be in a recession. So I need to wait another 3 months for that. But that would be a positive, because then I actually do believe we're going to have a good chance. And the third thing, I would love to see a calming down of grayscale. I still see this as a massive, massive issue. And it's kind of this, yeah, this dangerous thing dangling ahead of us, on top of us. And so if those three things were to happen, then I would like say, okay, you know what? I do have eggs in the basket. It's not as many eggs as I would love them to have. I'm gonna double down on the eggs I do have, but I'm really, really happy that we're gonna keep going up. At the end, it's gonna solve all our problems in the industry. And I mean, nothing would be better than to see 40, 50,000 right now and actually be sustaining there. So I would be super happy. Even though I would have to admit that my assessment of there being more new lows was wrong. And I would be okay with that. I'm absolutely fine with that. So that is a bit of my assessment. I don't know how you see it for yourself. And I mean, the boring answer here really is if you'd say that, yeah, we see newer lows, I think that's a boring answer. I don't know if you feel that there are other answers that you would come to that you would start reconsidering, that we may see more lows at the moment.
So I'm going to lead with a polarizing statement, but I think it's very, very true. It's much easier and much better to be a bull than a bear, because a bear's upside is 100% and a bull's upside is practically unlimited.
Yep, you're right.
And the same goes for the statement. I have an easier time arguing for my side than Julian, because I'm already allocated. You know, I'm a long-term believer, and a big part of my capital is already in the market, because of course I believe the bottom is in and we are going higher. My thesis, I would consider my thesis to be invalidated. So I have this trend line, and I think it's an important trend line. Breaking new lows, so going lower than 15,400, even in a wick, that's not a credit event. Credit events like March 2020, I think, are the exception. That would definitely invalidate my thesis. So making newer lows, breaking the trend line, and also just seeing Bitcoin kind of going sideways and suffering along under 20K for a prolonged period of time, I would also consider that as my thesis would have failed. Because I'm expecting for us to slowly grind upwards, or to have this insane, like going to 40K and back down again. That would also be a scenario that I would consider. But definitely, if we go under 15,500, my thesis that the bottom is in would have definitely failed. Sure. And probably people like El Capo Crypto, that made the 12K prediction exactly a year ago in February 2022. He made that prediction, and he had a tweet where he said, "I'm out of the whole market. I took all the capital and put it in stables and in fiat." His thesis calling for 12K would probably come true, because I can foresee if we are breaking the lows, we're probably headed for 12K. But I would, if I would need to name a probability, and maybe you can do the same afterwards, just to put a number on that. But I probably would give it a 66% probability that the bottom is in. So like a 2/3 probability. I don't know.
Yeah, I would give it a bit of a higher probability that the bottom is not in. So just a little higher. So I would have probably said a 70-30 ratio or something. I still see more than 2 out of 3 probabilities yet, just slightly more than 2 out of 3 that we're going to see a new low. I really, I want to admit, I hope I'm wrong. I hope, I mean, for every project, for every platform, for every investor, for every headspace, everything, higher prices would make life easier, right? So I would hope. Um, I just don't see. I just don't see it. I hope I'm wrong. Really, I hope you're right. I hope I'm wrong. But I don't see it. Yeah.
Would
Yeah.
so you're approaching the market and the current market conditions and your allocations without a lot of emotions. Like I could really see that 15 months ago when we were at an all-time high and you were practically the only person that was selling live on YouTube. You sold a few millions in Bitcoin, and you got a lot of hate for that. After, in the retrospect, of course, you were right, but you were treating these situations without emotions. And now, like 15 months later, where we are kind of at the opposite, you're also treating it without emotion. But even though you're expecting the bottom not to be in, you probably a larger part of your capital, at least the part that you want to have in crypto, is already allocated. Am I
Yeah, yeah,
correct
of
in this
course. I
assessment?
mean, yeah, I shared this several times. I mean, I do have an allocation in crypto, and I'm gonna keep building this year. I think over this year we're gonna see maybe one or two more new lows. So we're gonna see one or two of these little dips. But since I have like, let's say, a 70-30 probability, I don't wanna like completely bet on that. Where I'm like, okay, I'm gonna go short or something. I think that's absolute madness. And the market can turn on a dime. I can be completely wrong. The majority can be completely wrong. And to be honest, I hope we're wrong. I think it would solve everyone's issues. But yeah, I just think there's still so much fundamental. There's so many things are still fundamentally broken. They're gonna take probably a year or maybe a bit longer to be cleaned up. And um, yeah, I think when we do this entire kind of video in a year, I think at that point, probably there's a bit more pessimism in. That's just what I'm expecting. But the pessimism is kind of like next to, okay, we're going to have Bitcoin halving. Let's hope we get out of this entire mess, recession. Like, I don't know, people lost their housings and people lost their jobs and so on. It's like, it looks also dire. And at that point, I hope that I have like, yeah, that I see that hope at the end of the horizon where I'm like, okay, it looks really dire right now. It doesn't look good. But I'm really hopeful that we're gonna get strong. So that's kind of probably how I see being in a year's time.
Yeah, what is probably the easiest way, if you zoom out, we have this 3 years up, 1 year down, 3 year up, 1 year down, and usually the first year when we have an upside move, it's not a big move. Historically, it wasn't, and I could foresee this year to be very similar. And this could also mean that we will make a new low in the summer, which I'm not expecting. But even though we could make a low, let's say we could go to 12,000 during Q1, Q2, whatever. I strongly feel that with Q4, we are 6 months away from the halvening. So in October this year, October 2023, we are 6 months away from the next halvening. We would have seen 2 years of downside. So November marked the top in 2021. So November 2023 would be 2 years of a downside bear market. At one point, historically, those markets turn. And not that this needs to be an instant bullish super candle and we need to go to the old all-time high, but at one point they're going to turn. And my expectation is that we are going to close 2023 higher than we entered it. So this means, I think, higher than 17K or so, which is not a crazy prediction in my opinion.
I think you
And
could be right there.
and what this would give to a lot of people, it's basically the possibility of a whole year of DCAing. And if you're still looking to build a position, maybe you want to diversify a little bit, or maybe you want to increase your positions, a whole year in these price ranges between, I don't know where we are right now, or around that level, would be amazing. And after that, we have the halvening in 2024, and probably the upside and the hype will be back. One thing just to consider that could fuel into this is if we see regulation, especially good regulation, where it finally opens the floodgates for institutional capital. Because if you're a high net worth individual, or if you're a traditional company, like why didn't Silicon Valley ever touch crypto? Because those companies, they have way too much to lose. They have a big reputation. They're only going in if they're feeling certain and if they know the regulation and how these things are going to look like. So Silicon Valley is very let's say cautious when it comes to crypto. We haven't seen any big company. Of course, in 2017, some made a slight move and hinted at a few things, but we've not seen a Silicon Valley company really doubling down on crypto and going into that direction. Maybe now with, I don't know, AWS and Avalanche partnership, I don't know if this is considered Silicon Valley, but there's definitely.
And I'm never sure how solid this stuff is. I don't know. Like, I don't know what's we saw these really crazy things where, I don't know, a coin said we have a partnership with Burger King, and then it turns out the entire partnership was like a daily feeding, a daily lunch that was delivered or something. I don't know. A partnership can be stretched far. Yeah. It would be interesting to hear in the comments, in the chat, or on feedback on Twitter. What do you think? Do you think bottom is in? Do you think we're going to see new lows in this cycle? Why? Obviously, always interesting to hear the reasons. I always make the statement of making, like, predicting is absolutely useless or worthless, but the actual process of making predictions is priceless. Meaning, saying what the price is going to be is completely irrelevant. What matters way more is the thought process, and so that other people can follow that thought process, and that's I think the powerful. And I hope that Fabio and I were able to do that. Obviously, two caveats here. On the one hand, nothing here, no matter how bullish Fabio is or something, is investment advice. We may be completely wrong. And obviously, also my side, just because I'm a bit skeptical right now, I have full faith in crypto in the long term. This is more of an intellectual exercise. I keep buying crypto at the moment, dollar cost averaging. I think it's a fantastic time. I am bullish on the long term. And for me, it's just, I do have this natural skepticism at this very moment. And I think that made a very nice organic conversation. And I hope this was value to you. I hope you got some fun out of it and also took some valuable information out of it. If you did, let us know. And subscribe, follow, like, and then we see you next time. I know, Fabio, if you have any famous last words here, I think I'll let you to close the show.
Yeah, thanks everybody for tuning in. As usual, you can find this live on Twitter Spaces. If you missed the beginning, there will be a recording on Twitter. We have this on YouTube. We will also offer this as a podcast. Thanks for tuning in. We are doing this on a weekly basis. If you're not a Cake customer yet, please head over to Cake DeFi and do so. And one thing I want to reiterate and just mention, we're going way and above and beyond to practice one of our core principles, which is transparency. And since about 2 or 3 weeks, you can find a Merkle proof of reserves on our website, which lets you generate a unique ID, which on a blockchain level, you're actually able to prove that you have the funds and we have the funds that we claim we have. And we're like, I think there's like 2 or 3 companies that are doing that. Like, we're doing a better job at that at Binance than Coinbase and Kraken, you name it. Like, we have one of the best Merkle tree proof of reserves out there. Please head over to our website and test it for yourselves. We're not just talking the talk, we're also walking the walk. So head over to Cake DeFi, check your proof of reserves, and if you haven't not made an account yet, please head over and make your account today.
That's amazing. Thank